an appeal decision came out this week, or actually last week on the 20th. We're going to talk about, give us a moment here. We'll let the room fill up, let people join in, and then we're going to hop into a discussion again about cannabis business taxes and cannabis business audits. It's a very important topic to understand right now. So we're going to go ahead and maybe like 5-7 more seconds here, and then we're going to hop into the presentation. Should be maybe 20 or 30 minutes, but it's going to be very, very valuable for you to understand this information so that you don't end up in the same position that this cannabis dispensary from the state of Colorado ended up in. All right, so let's go ahead. We'll start from the top right here. So what are we going to be talking about? Well, a new appeals court ruling came out this week regarding cannabis business taxes and audits. Now, it centers around data access and backing up tax positions by a Colorado dispensary. Now, this is a pretty cut and dry case, but it's worth discussing because tax lawyers are out there giving dispensaries false hope that they can beat the IRS and nullify 280E. Now, this is not the case. You cannot beat the IRS. Very few times you're going to be able to do that. That's not the point here. At any rate, if you have any questions about what we're going to cover in today's video, then please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. All right, so before we get started, I need to let you know that the information contained in this presentation is meant for guidance purposes only and not meant as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general. So with that all out of the way, let's dive into what is the info about this case. Now, with every case, there is usually something in question. That's why we're in the court, right? And for this case, it was to determine the IRS's power and ability to enforce a provision in the tax code disallowing deductions for business activities concerning controlled substances which are illegal under federal law, aka asking the court for the 20th time, is 280E enforceable? Okay. Is IRC 280E enforceable? That is the main question of this court case here. Now, basically what happened is that this was a Colorado dispensary that was audited and things didn't really end all that well for them, okay? The IRS, throughout an audit, they wanted more information to substantiate the dispensary's financial statements. Now, the IRS wanted a fair amount of data, but this also included metric data, track and trace data. It's, stuff that the state mandates of you. Okay. Now, they wanted this metric data to substantiate the figures on the tax returns for this cannabis dispensary. Now, the dispensary did some data. They did send some data to the IRS, but they did not comply with the metric data request. And this is where the case really goes sideways for the dispensary. Now, the timeline of this case is very, very important. Okay. This is a cannabis tax audit. Now, what happened is that the tax years in question are 2013 and 2014, so 6-7 years ago. Now, the data was requested in 2016. Now, the date of the appeal decision was October 20th, 2020. So this case has been going on for at least 4 to 5 years here. Now, that means that there is 4 to 5 years, maybe even 6 years of interest, penalties, and all this stuff building up over time. That's what happens in an audit. When they find out you've underpaid, they're going to assess penalties and interest, and it compounds, sometimes monthly. Now, it's likely that once the dispensary was contacted by the IRS, either a legal group reached out to them or the dispensary reached out to a legal group. And this firm filed an appeal for the dispensary saying that, hey, they didn't miss their timelines and that you cannot pull this data from them. It's just unconstitutional or whatever they want to say. It's not right to be pulling this data. Now, from here, understand that this case now is stuck in court for lots of years, racking up those penalties and racking up those fines. And most importantly, the cost that's never talked about is racking up all these legal fees by lawyers who are just having you on the clock, pulling this information for you and doing the work. Hey, they deserve to get paid. I'm not saying that lawyers don't deserve to get paid, but this is a very expensive process if a lawyer is going to fight the IRS for you. Now, the cannabis dispensary's lawyer, they had made arguments by asking for this additional data was unnecessary, essentially. Now, those arguments were, number one, the IRS's investigation is quasi-criminal. Yes, the lawyer said this about the IRS. and exceeds the agency's authority and is being conducted in an illegitimate purpose. Okay, well, how it came back, the court said, hey, the IRS was conducting this investigation in good faith and followed all their protocols, so this argument is gone and off the table. Now, the second argument the lawyers tried to stand on, and the dispensary tried to stand on, because they did sign off on this, is that even if the investigation was a legitimate investigation, it had a legitimate purpose, the information sought is irrelevant. Well, in general, what you need to understand is that the IRS has what we call broad latitude to issue summonses for the purpose of ascertaining the correctness of any return, making a return where none has been made, or determining the liability of a person for internal revenue tax, or collecting any such liability. So pretty much the IRS can ask for whatever they want to substantiate your return. So this argument is gone and off the table. Now, the third argument here that we have is that the lawyer said the investigation is in bad faith and constitutes an abuse of process because A, the IRS may share the information collected with federal law enforcement agents. Well, guess what? They wanted us to not do this because they didn't want to get anything with the DOJ, Department of Justice, DEA coming up at them. Now, guess what? The dispensary is blatantly selling cannabis, and anyone in the general area could tell that. And so any enforcement agent could have, just walked into the area and learned this on their own. So this argument off the table. Now, B, why this constitutes an abusive process, what the lawyer said is that the IRS summons was overly broad and would require the creation of new reports. Guess what? Doesn't matter. This has no bearing. You, the taxpayer, and not the IRS, needs to provide data to back up your tax position. If you've created a tax position with no backup data, this is now your big problem. It doesn't matter if you have to unearth a hard drive from the landfill to back up your tax position. You better find that hard drive, okay? So this point is off the table. And then there's two more here to base that this was an abuse of power by the IRS. What the lawyer said was that the dispensaries have a reasonable expectation of privacy in data they tender to a state regulatory authority. Pretty much from another cannabis tax case, the precedent was already set that the taxpayers have no reasonable expectation of privacy in the metric data collected on their business. Essentially, a person has no legitimate expectation of privacy in information that they voluntarily turn over to third parties. Okay, that is verbatim from a previous case. So that point is off the table. Now, the last one here, why this case could have been potentially an abuse of power by the IRS, the lawyer said, is that those state authorities cannot provide this requested information without violating Colorado law. I'll save you the explanation. Guess what? It came right off the table. They looked at other precedents, and it said that the court therefore concluded that MED employees, which is the Marijuana Enforcement Division in Colorado, their employees' compliance with a summons seeking metric information would not constitute a crime. So pretty much all the arguments for the dispensary were easily thrown out by anyone that has half a brain and can read precedents, okay? Now, let's keep walking through this here, and we'll talk about the results of this cannabis tax court case. Okay, as you may understand or may guess by now, the dispensary lost their appeal, and the IRS will get the requested data, the metric data themselves, from Metric or from the MED, which is the Marijuana Enforcement Division in Colorado. But now the cannabis company, it's going to cost them a lot more money compared to if they just shared the data 4 or 5 years ago with the IRS. Now, here is the court's verbatim response, and I need you to pay attention to this. This is incredibly important. They say about the arguments we just talked about that these arguments, start the quote right here, these arguments are familiar to us. Over the last several years, multiple Colorado marijuana dispensaries have challenged the IRS's ability to investigate and impose tax consequences upon those dispensaries. Understand that those dispensaries have been represented by the same attorneys that are representing the dispensaries fighting the summonses in this case. Those dispensaries have lost every time. And it ends here saying the same result is warranted here. And then they then list off all the cases where these same exact lawyers lost on those same arguments. it's essentially the same case, and these lawyers are just cutting and pasting and repeating, of course, change a little bit of specific information, but they use the same arguments, and they lost for their client. And I'm sure they knew they were going to lose. They're just trying to get those fees and shoot their shot, see what happens. So here's what happened to the dispensary, right? They got audited. They didn't like the outcome, and they engaged an expensive legal group who used unoriginal arguments that always lose to give false hope to the dispensary owners. The dispensary lost, and now they are out a lot more money compared to if they had just simply, number one, filed their taxes properly in 2013 and 2014 and kept accurate records to substantiate their tax return position. Number two, if they had complied with the auditors when they requested more documentation. If you just play ball with the IRS, you're going to probably end up in a better spot unless you just go ahead and say, all right, let's go do legal stuff on them and see if we can push them. You will not win, okay? And number three, if they had just at the end of the audit worked with the IRS to set up a payment plan and then just start paying down that debt. Maybe they didn't have the money at the time and someone said, hey, fight it, kick the can down the road, and maybe you can win a judgment later, or whatever's going to happen. But again, putting these things in the court for multiple years, your penalties, your interest, and your fines are going to rise, and you're going to be caught holding the bag, and the lawyer is going to say, well, sorry, we tried, can't help you out, okay? So this is not what you want to do. You do not want to go against the IRS. So lessons and what this means for the cannabis industry, okay? I want to start this off. Before we go into the 4 lessons that I want to cover, I want to talk about audits in general, just real quick. We've talked about this at length in many other videos. You may have not seen them, but you will likely get audited as a cannabis business, okay? 1 in 5 cannabis businesses in the state of Colorado is being audited at some level of the government. Now, why Colorado? Why do I bring that stat up? That stat that we have from boots on the ground, from tax lawyers and CPAs on the ground, but also because it's the first recreational legitimate market. So they've got a little bit of headway. If you look at these timelines we're talking about, tax returns from 13 and 14. This is not when it was recreational, but at any rate, you're going to start seeing audits from those first few years of the recreational market because they need to wait a little bit of time so they can go back and actually do that. And process takes a long time. So what should you do when you get audited as a cannabis company? Number 1, you need to contact your CPA immediately and let them know the state of your situation. Now, from there, you're going to take specific advice from them, but generally what you're going to do is respond back to that data request from the IRS with complete information, and you're going to be courteous throughout the entire process as well, even if you have to be the bigger person. Be that bigger person. You don't want to piss off an auditor. And lastly, if you do get a judgment, consider what they call an offer in compromise, which is, hey, say they levy a thing of $700,000. What if you could offer them $500,000 and just call it a day? See if they're able to do that with you. If not, then get on a payment plan that works for you and your financial situation. Do not try to be a renegade and try to challenge the IRS on their practices that are well established with court precedents, and it just will not end well. So those are the steps to take for a cannabis tax audit. Now, let's hop into 4 lessons here that I want to kind of extrapolate from this court case here, okay? So number 1, the first lesson is that organizational entity structures are incredibly important for cannabis-based businesses. Now, some of the entities that were involved in this tax court case were LLCs, and these are called pass-through entities. Essentially, all the financials flow through the business, pass through onto the member of the LLC, which could be multiple or single members. Now, what this means is that if you're being audited and you have, an LLC as one of your entities, they can now dig into your personal 1040, your personal tax returns, and look into those things. Now, if you're married, they can start to pull apart all your spouse's stuff, and I'm sure you don't want that. Okay. Now they're going to also be able to look into your personal bank account information. Now, maybe they look and they see a $12,000 deposit for cash. Okay, you better have a receipt to substantiate what that was from and that it wasn't diversion of cash from your cannabis business out of the business and into your personal pocket. Okay, now another reason why it's important to have proper entity structure is that when they audit you as an LLC, you're going to get, well, how do I say, you're going to get taxed at your personal tax rate, which could be 30, 40, even 50%, depending on your tax bracket. Now, at a corporate tax rate, it's capped at 21% as a C Corp. So it's very important to work with a CPA and a lawyer to decide on the right entity structure for your cannabis business from the get-go, having a balance of risk and of the economics of the business and the deals that you are creating with your business. So that's lesson number one. Now, lesson number two is that you want to make sure that you work with experienced professionals to file and prepare your cannabis business tax returns. Investing in a CPA that can give you the proper guidance on IRC 280E can be an incredible investment that can serve you big time and save you big money on your cannabis business tax returns. And if you get audited, you already have someone in your corner who can help you work with the IRS to reaffirm your tax position, because any credible CPA is not going to create a tax return and prepare a tax return for a cannabis business without having any substantiating information behind the numbers that create that return. If you're working with someone that's not having backup data for your tax return to substantiate those claims, you maybe want to look for somebody else to work with. Hey, hit us up, hit our website, greengrowcpas.com, or call us at 800-674-9050. We'll always be here. But really, work with somebody experienced. Don't just try to save $500 or $1,000 in your tax prep fees, only to later be given, a huge punch in the mouth by the IRS because you just wanted to save $1,000 and now you're holding the bag for $100,000 in taxes. That is not a smart choice on saving money. Don't cut corners on CPAs and don't cut corners on your lawyers. Now, the third lesson I want to talk about here is that if you are being audited by the IRS or any level of the government and a tax agency, then you should consider engaging a CPA first before you engage your lawyer. Understand that you're not in any legal trouble here. You don't need a lawyer right now. You need a CPA who can interface with you and the IRS to make sure that your tax position is substantiated. Now, there are many amazing lawyers out there, and I'm not trying to say don't work with lawyers, and I'm not anti-lawyer. I think lawyers are essential to everything, to protect you, to make sure you're doing things right. So please do work with lawyers. You will need lawyers in the cannabis industry. I don't think anybody that can make it through 2 or 3 years without having to contact a lawyer at least one time. Now, having a CPA can help put you at ease and help you actually remedy the situation instead of getting hostile and being sue crazy and posturing up to the IRS and saying, bring it, bro. Because look, they will bring it, bro, and they will smash you, okay? Now, again, you're not in any legal trouble. They just want clarification. So, don't start sicking your lawyers on the IRS right away. Work with your CPA first. If they can't remedy it, then seek the help of a lawyer. Now, the IRS, they want to see it. You're probably going to have to show it, especially if you're a cannabis business. So don't think that you have some type of power where you don't have to show things off to the IRS. They will find a way to get around it. Trust me, they have all the time. Time is not in your favor because interest and penalties are racking up every month. They'll take 5-6 years to do what they want to do because they know that it'll make them more money. Now, here's a point to the dispensary, but I'm going to take it away from them immediately. I think I covered this a little bit at the beginning. What the dispensary was afraid of is essentially that the IRS was going to hand that metric data over to the DOJ, the Department of Justice, who would then kick off an investigation for criminal drug trafficking. Well, guess what? Step back. The dispensary wanted immunity from the DOJ if they were going to hand this information over. And look, I totally get it. It's pre-recreational. They probably, and it's federally illegal. So they were a little bit nervous handing this data over. But this is where the point gets taken away from the dispensary. Look, they're advertising that they are the #1 dispensary in Colorado. And anyone with a medical card could just walk in there and see that they were breaking federal laws. It doesn't take, an undercover investigation to unearth this, or a phishing expedition by the IRS to show that you're trafficking cannabis. It's very obvious. We can just see it from the street. We can probably smell it from the street. So again, all of these things that the dispensary used as, defenses and arguments were already set by precedent that they were, null and void. They were never going to win. Once this brief was filed an appeal was filed by the lawyers, it was lost. It was already dead on arrival. So look, the only people that made out in this are the IRS and the lawyers. And the lawyers, they said, hey, we'll help this cannabis business, but they can't make any guarantees. And no one would ask for guarantees. You can't guarantee these type of things. But they should have known, anyone with half a brain would have known that they were going to lose this battle. Now, the fourth lesson, we'll round it out here. 280E is going nowhere. It is here to stay unless cannabis is rescheduled out of Schedule 1 and Schedule 2 of the Controlled Substances Act. Now, don't let any lawyers or any inexperienced tax professionals tell you that you can beat the IRS when it comes to 280E. Look, several high-profile cases and many more not-so-high-profile cases have shown time and time again that the U.S. government will not back down from enforcing IRC 280E. So what you can do is prepare your taxes in accordance with tax laws and precedents set forth, okay? Don't use any new tax loopholes. Don't read some stupid blog by some CPA saying, oh, you can try this thing out. Don't be a renegade and try some crazy new thing out. Do things that are proven and tested by the tax courts and reaffirmed by the IRS that, yes, this is the way that you file your taxes as a cannabis business. And look, don't do any funny business with your COGS. Don't try any of that funny stuff, okay? You have to have a reasonable methodology. Don't just start stuffing things into your COGS and think you're going to get away with it, because you're going to have to back up every one of those things that you said you would do, okay? And conversely, from that position, if you want to be a renegade or you don't want to do, and you want to go ahead and, do all this stuff, hey, that's your own prerogative, right? Some people say, hey, this is a negative mindset, Jim. Don't put yourself in that mindset, and we should fight the tax man and fight the pressure of the IRS. Hey, your position is your choice. And if you want to be a champion for the industry and fight the fight, hey, that's your choice. I wish you much success. Our company wishes you much success. But you knew the tax issues that were in this industry if you did even 1 day of due diligence when researching the cannabis industry. So don't come out here and say you didn't know this was the way it was. You have to do your due diligence. Okay, and conversely, from that position, if you want to fight the fight, great. But again, conversely, there are plenty, and most, I would say an overwhelming majority of cannabis business operators are out there now building their business, paying their taxes, potentially even paying too much tax. They should reach out to us. We can help them with that. And they're making the best of this current scenario. They're not sitting there griping about how unfair it is. They knew coming in that it was going to be relatively unfair compared to other ordinary businesses in the tax realm, but they're going to do what they have to do to sustain over a few year period, or maybe it's 8 years until it gets rescheduled. Who knows? At any rate, they know that they're coming into a tough situation. They're going to make the best of it, and they're going to hopefully be successful for the long term. Now, hopefully this video has brought you some value and helped you to better understand how fighting the IRS on well-established precedents around IRC 280E will only result in you paying higher taxes and incredibly unnecessary legal fees. Now, if you need help with cannabis business taxes, cannabis accounting, or help with your cannabis business tax audit, then please reach out to us via our website at greengrowcpas.com, or give us a call at 800-674-9050. All right, so let's hop in here. Let's answer some questions. If there's any questions here, the Goat Tree says, hey, guilty until proven innocent. Welcome to dealing with the IRS. Essentially, yeah, it's going to be guilty until proven innocent. That's not really how it is, but it looks like that. You have to substantiate your tax return, It's not they call it the burden of proof is not on the IRS to say that you're wrong. It's the burden of proof on you to say that you're right. And here are all the reasons why you're right. So look, it may seem unfair, but you should know this stuff going into the cannabis industry. If you don't know this, you've obviously not done enough research on the legitimate legal cannabis industry. If you're operating in the gray market or the illicit market or the illegal market, and you get into the legit market and you want to gripe about it, hey, you should have looked at this. But also understand, if you are in the gray market, illegal market, the illicit market, you still have to pay taxes on illegal money. It doesn't matter how you make this money, you still have to pay the IRS. So it doesn't matter really if you're licensed or not, you still have to pay taxes, and you still have to do all of your accounting like a regular cannabis business. And if you don't, right, look at people like the Al Capones of the world. They don't go down for killing people or selling drugs or doing really bad things. They go down for tax evasion. So make sure that you're paying your taxes on all of your income, legal or illegal. All right, let's see if there's any more questions in here. I don't see any other questions, so we're going to sign off on this. Again, if you have any questions about cannabis tax audits, or if you need help with your cannabis business taxes, then please reach out to us via our website at greengrowcpas.com, or give us a call at 800-674-9050. Have a great day, and we'll talk to you soon.